Let's get started. There's a couple of speakers who didn't accept the invite yet, so once we get to your topic, we'll ping you again. All right, so welcome to the weekly review here at StoryTrading, where we review the happenings of our VIP community over the past week. There's a lot of action going on over the past week. It started with a new VIP pick, Globe GLBE. We actually are not going to have too much time to speak about that tonight, but you can look out for our video on GLBE up on our YouTube coming soon. So make sure you're following us at youtube.com/storytrading so you can be notified when that GLBE video comes out. In the past week, we also had a VIP presentation on SPAC warrants by Chris Hampton. A really intriguing discussion about the pitfalls and opportunities of SPAC warrants. So if you, again, follow us at youtube.com/storytrading, you'll be notified when that video comes out. We got lots of speakers tonight. We're going to be talking about VTSI, SEAC, GMER, and Xspa. So I want to start with VTSI. VTSI has been a long-time VIP pick in our community. It's a stock I've known about for, maybe 5 to 10 years. I used to follow every time there were riots. And it's been on our radar most recently the last couple of years when there were some political things going on in the country. It started out as just a trade of the week idea and eventually captured the attention of a lot of people who like the fundamentals in this. And we ended up speaking and inviting the CEO of VTSI to come speak to our community several times, and we made it officially a VIP pick. This past week, one of our contributors who can't be here tonight, his name is Kevin Crawford. You can follow him on Twitter, SharpSheCity, SharpCity. He was awesome in our community this week. He had a private meeting with the CEO earlier in the week and shared his notes with the community. As a result of that, I increased my position. And then like 2 days later, or actually the next day, really that next morning, he caught an RFP win on some government website, a Canadian contract. And I added more there along with a lot of other people in our community. So he won Researcher of the Week. We've been awarding people with this new competition. Every single week, we choose a Researcher of the Week. It's turning out really awesome, increasing the participation among the community. So I invited Mark Gomes. Mark Gomes is a very active participant in our community, and has been, very bullish on VTSI for a long time. Let me give the floor to Mark. So we wanted to have Mark Gomes come on here to talk about the fundamentals of VTSI, one of the 4 story trading pillars. What's really going on there fundamentally, and maybe if you want to touch on the Canadian contract that was won and they PR'd on Friday, by the way. Mark, how you doing? Welcome to the show.
Hey, we there?
Yep, I hear you.
All right, sorry about that. The mic was off. Good to be here.
Good to have you.
So, you want to start with valuation, earnings, trends, or this Canadian deal? Any way you want to go, we can move in that direction.
Well, I know it's something that you have your own method about fundamentals and valuation. This is something you've been talking about for a few weeks in your own community. The stock was already at one of your favorite stocks already, even before this news. That it was at a low in terms of that chart you have, risk reward chart in the value channel. So it was already there. So maybe you want to start there, and then you can layer it on top of that what the Canada deal meant.
Right. So, clearly, this has been a stock that tends to spark up every time there's some kind of social unrest or uprisings, and then really came into its own a little over a year ago with the George Floyd incident. Unfortunate that it takes something like that for attention to really be brought to the fore for a company. But VTSI has been around for decades, serving the police and military communities through training simulations. They have training simulators at that vary and range from just a screen that's in front of you to an immersive 300-degree view. And then for military, they also have simulations there, as well as actual kits. Okay, and one of the main kits they have is a Recoil Kit, which basically will turn a real gun into a gun that does everything that a real gun does except shooting real bullets. So you'll have fake clips. When you shoot, it'll give you kickback. There'll be a little laser on there, so it's a very, very small difference in terms of how the gun feels, which is a big differentiator for them, which allows somebody to actually use their actual firearm in simulated situations and see how accurate they are, have to change clips, have to fix the gun if it jams. There'll be simulation jams. So it's a really innovative product. They have a patent on that, along with the software that they use for simulation. So in addition to all of the groundswell of demand around police training, law enforcement training around the country in the wake of the George Floyd incident. By the way, that's not just in the US, that is all over the place, and we'll get into that with a Canadian deal. They have seen a huge uptick in demand. All right. And where you may not see it in the earnings results yet is mainly because these deals take a while to close, to get ramped up, and a lot of those deals are actually on a subscription basis. They've been actually moving to a subscription basis, which masks a lot of the underlying growth that we see in the company. All right. So, all right, enough on that. I think the most important thing for investors to know is that when looking at their earnings, number one, if you go to a site as simple as Yahoo, you'll see that their performance versus estimates has been stellar, especially the last 4 quarters since the George Floyd incident. They beat their estimates in the December quarter of last year by 17 cents, and then March by 9 cents, and then by 7 cents, and by 6 cents in the most recent quarter. And they are expected at this point to do 35 cents of earnings next year, which I think is, it's very safe to say that that's extremely low. I'm closer to 55 cents in my estimates, which equates to only about a 10 or 12 PE based on its current enterprise value. Okay, so extremely low PE on a company that looks like they should be growing at about 30% a year for the next several years, and having a subscription model to boot. So from a valuation standpoint, obviously a no-brainer, because they've got the wind at their back, they've got the valuation low, and something that I like more than anything else in a company is they have tremendous operating leverage. And what that means is, as their revenues increase, their EPS will increase at a much faster rate, to the point where, actually, Ben, you and I did an interview with the CEO a while back, and I was able to triangulate and kind of back him into a corner and admit that if and when the company gets up to 50 million in revenue, that should equate to about $1.50 of EPS. So that, when you just do the math on that, you've got a company that's trading at $7, really $6 if you X out the cash, that can do $1 to $1.50 of EPS in the next couple of years. And the reason for that goes back to the stellar work that Kevin did this week, uncovering the Canadian deal that Vtsi has just won. Now, this is something that the market hasn't really responded to. It had a nice move on the day that the deal was won, but then the stock actually pulled back when the deal was announced. I suspect that the reason for that is that there were probably traders that bought excess shares on the first day, gaming the PR, and then when the PR came out, they got out. And to me, that was really short-sighted, because if you look at the news, and by the way, it's not the fault of the traders or any investors, because the press release didn't state the size of the deal. Okay.
Yeah, it's not in the RFP either, by the way, Mark.
Right. But it can be implied if you understand the pricing of Virtuous products. All right. So based on the number of units that are slated to be purchased under the contract, it's a 3-year contract, 1 to 200 units, and the price per unit, it equates to basically a $20 million deal. Okay. To put that in the perspective, they only do about $20 million per year in total revenue. So in one deal, they just got a whole year's worth of revenue, jump-starting the next 3 years that this deal is going to be in place, giving them guaranteed basically 30% growth if there's linear, a linear move in this particular deal. And this isn't the only large deal that they're working on. Obviously, there was the government contract that got a little bit delayed. They're a part of it if they're not the principal. There was another part of the government contract that ended up getting delayed, which created an assumption that Virtua would also see delays in that deal. That is not necessarily true, because the recoil kits are not integrated into the system that the military is buying, but it is an integral part. So they can use the recoil kits without the system that they're looking to buy. But if they buy that system, then obviously it goes in. So the good news there is that the delay in the military side is now expected to be much less onerous than originally expected. And that, again, is a multi-tens of millions of dollars revenue stream for Virtua coming up.
Awesome. Good synopsis. And I'll note also on Friday, there was an analyst that came out and upgraded the price target to $12. Did he catch that, Mark?
Yeah, and there's actually one of the other analysts out there already has a $13 price target on the stock. I mean, to put everything in perspective, my specialty, of course, is fundamental analysis, and analysis of news results like this. I'm a 30-year veteran serving Wall Street, and when I saw the Canadian news come across, running the math, the implications from my perspective, my calculator says that the stock should have been up about 25 to 30% on that news. Okay, it was on its way to doing that. It was up 12%. On the contract award, there was no press release, so it wasn't news per se. But when the news came out, I was actually surprised that the stock didn't continue forward to move towards that 25 to 30% move that I would have expected just on that news alone. In addition to the fact that the stock is now has pulled back quite a bit, is in my estimation now very much undervalued. When it was up around 10 or 12, I thought that was a good time to take some profits. But here, with the Canadian deal and having pulled back into the sub 7 range, it's a no-brainer. I mean, now with the Canadian deal in hand, this is where you should see the stock in the double digits, and then moving forward from there.
Yeah, absolutely. I'm right there with you. There's been a long time core holding for me. I've been adjusting my allocation, and I dramatically increased my allocation on Thursday when the contract was on, and I kept buying as it was Friday morning. I kept buying. I bought low, I bought high Thursday and Friday. So I'm really excited about VTSI. And I don't know, I'm thinking of making it like a top 3 position, possibly. I'm not sure. I have to think about it.
Yeah.
But I think it's like round number 5 right now for me.
Yeah, it moved into that territory for me as well. I was a heavy buyer on Thursday, and I was a buyer on Friday as well. I was a little busy, so I was only limited in what I could do Friday. But yeah, this is a no-brainer. It's a no-brainer here.
Awesome. Thank you so much, Mark, for giving us a fundamental perspective on VTSI, one of the very important pillars at StoryTrading, as we look at technical sentiment and catalysts, all 4 of them together to try to decide entries and exits. And for me, when he added it all up, I think it's a strong buy here. So thank you again, Mark.
You got it. Take care.
All right. We want to move on to give Money Mark a follow. Hit his profile there. He's got a lot of good information to offer the Twitter community. I want to move on to SEAC, SEAC. Let me give speaking rights to MSpark Capital. So SEAC, I'll wait till the mic on. Maybe not. I don't know. Let's see. Hit this here. Invite to speak. Make sure it's getting this. Let me try co-host, see if that works. All right, while we wait for Capital to get set up, let me just ping him, see what's going on with his technology there. All right, so what we're gonna do is come back to SEAC. Hey, as soon as I see that he's added himself as a speaker, we will get started on SEAC. So actually, why don't we move on to Xspa? I'm gonna invite Patrick. You there, Patrick?
Hello, can you hear me?
Yeah, I hear you. Awesome.
Okay, great.
Thank you for joining us. I'm going to give the audience a little background on Xspa. This was a stock that's been on my watch list since COVID started. On Black Friday, when Omicron reemerged, I entered it as a quick, what I thought was going to be a day trade as a COVID play for the day. And as it turns out, I was doing some research. I'm like, damn, the fundamentals on this are extraordinary. It was basically trading at a 5 PE, and their business was going up, even though before Omicron, it seemed like COVID was dying out, but their business was exploding. And that's because travel was coming back, and Xspa, their business is, well, one of the things they're shifting into is COVID testing at airports. So I actually made this a VIP pick shortly thereafter and presented it on Benzinga. And there's Spark Capital. Thank you. We'll get to you next. Thank you for getting that speakership going. So, yeah, Xspa, really bullish on this. I'll tell you what, here's the story. I think the four pillars are amazing on this. You got like a 5 PE. You got the technicals. It broke the 200 DMA recently. You had the earnings report recently. I talked about the stat catalyst on Xspa. You got the contract with the CDC being expanded. I mean, it seems like a perfect storm, right? But in terms of the price of the stock, I think it's solely going to be really based on sentiment here. Sentiment in terms of the sustainability of the business. I've seen many, many great companies that are fundamentally strong trade at a 5 PE, possibly even a touch lower, for basically forever, if investors think that the company is not going to be there for the long term. And I think that's the whole story on Xspa. Is this company going to be here long term or not? Now, they've been doing a lot of things to try to make sure that this COVID testing business can turn into something long term for them. So if you want to give us an update, Patrick, first of all, Patrick runs a Telegram room on Xspa. There's thousands of people there. I know there have been more catalysts in the past. So why don't you tell us a little bit about your Telegram room, Xspa, and tell us what recently has been happening that may affect the company in the past week.
Sure. Yeah. Again, thanks for having me, Ben. Really happy to be here. I really enjoyed your pitch on Benzinga a few weeks ago. That was a really strong one. I'm the owner of the community on Telegram. We have more than 3,000 members. Basically, I started this group around 1 year ago when I just saw the potential of the stock, and it was driving me nuts about how the manipulation was driving it lower and lower. So thought about, let's regroup retail investors, talk about catalysts, talk about sentiment, create a good, strong, supportive community, which has been great so far and really helping, I think, push the stock even further. So let me start around fundamentals. You like the four pillars, I think, are a good way of depicting a stock. So the fundamentals here, it only gets better. So Express Check has been working, their brand that does COVID testing in airports. They had their blowout Q3 earnings, the best quarter ever recorded in company history. They finally became profitable with 5.5 million in earnings. They did around 26 million in revenue. They have 100 million plus in cash, very strong cash position from previous offerings. So now no more offerings inside. They have very strong cash position. So in our group, actually, one of our members wrote an algorithm to track the bookings on their website. And then we see consistently Q4 beating Q3, and we confidently estimate around 15% increase in bookings from Q4 to Q3. So again, business is booming. People are booking, these tests. It's very convenient before you fly. And then, across the nation, there's also, when you want to book an appointment in other facilities, there's always very jammed and a lot of people. So very convenient in the airport. Another thing is, they extended their CDC collaboration. So they have a biosurveillance program with the CDC to track incoming variants that are coming to the US through the airports. So they extended that with the Omicron variant. And then, the CEO, Doug, talked about they implemented it quickly, but they haven't discussed the numbers yet. So when we will find out the numbers, that would definitely be, a good boost for the stock, a good catalyst. They're hiring a lot. Last time I checked, they had over 100 openings. So, they're hiring, they're doing well, they're expanding locations, they're opening 6 or 7 new locations in airports in 2022. So very bullish on the expansion. There's no, this is not a short-term thing. The CEO is very confident that this is going to stay, testing is going to stay, whether it's Omicron, another variant, another disease other than COVID, biosecurity now is needed in airports. This is the new norm, and he does the same analogy. After 9/11, you remove your boots every time you fly for security. Now we're going to have a new type of security, right? Biosecurity. You need to be constantly tested to make sure no very dangerous diseases enter the country. Another thing is they opened their first street location at JFK International Airport. So this is another stream of revenue. They're working on the brand Treat for travel, health, and wellness. And they're going to couple these two brands together. So you're allowed to do a COVID test at Treat. Are allowed to take some prescription drugs. There's some yoga, and they sell a few travel and wellness items there. So they're also planning to continue expanding Treat locations and having real estate at the airport. So this is fundamentally, very bullish on that. Let me talk a bit about some catalyst and sentiment. So a few weeks ago, we hear that the Canadian government awards a 500 to 600 million contract to 4 companies to control testing through the borders. That's around 100 to 150 million per company. When you look at XSPA with a valuation of 180 million, that's huge, right? So there's speculation. What is the government contract going to be? The CDC has to match Canada. The US cannot just lag behind biosecurity. So I think this is very positive for the sentiment. In the last Q3 report, the CEO mentioned that he is wanting to get aggressive in his buyback. So they awarded, they allowed a buyback program of 15 million shares, roughly 15% of the float. That's huge. And then they're going to do this through September 2022. They've already started this program. They bought around 250,000 shares. And when asked in the earnings conference call, he said, we are wanting to be much more aggressive in this. And I can see in the chart, I can see some solid foundations there. I can tell that there is some buying going on, and we will definitely see in the Q4 report. So definitely that's really good for the sentiment. There's the new variant of Omicron on Friday night, just 2 days ago. So they were able to detect a new variant of Omicron. So through the biosurveillance program. So that's really good news. It means the program is working. It is predictive and is able to predict what type of variants will emerge and will spread in the US. So I'm sure the CDC is very bullish on that. And, the CFO has been buying shares for quite a while now, and then it's not selling and holding his shares. So that gives us good confidence in the company. Now I'm going to get a little bit to the technicals here, and I really love the technicals right now. The stock is like really solid. So if you look, first of all, you have the golden cross. it's incoming. You have the 50-day moving average about to kiss that 200-day moving average. And it underwent a 20-day moving average correction in a couple of days, and it seems like it's ready for the next leg up. I feel very confident here that this is not going to be a pump and dump scheme, right? It's slowly building up. Institutions are loading, shorts are covering, just like you showed in your presentation. And then basically, this is solid bullish momentum. You're going to get that golden cross and keep going towards the $2 range. Right now, it's around 170 range. And then breaking that $2 resistance is when a lot of people are going to jump on train to see that it just got this really bad reputation, but the company reinvented itself, and retail are really missing out on the action that's on this stock just because of, previous historical bad performance. So yeah, that's what I have in general. A lot of good news coming on this. I'm very bullish on this. They have a projected 500 million revenue in 2025. So you can do the math on that. I see if you do the math on that and you assume a ratio of 20 for price to revenue, you can see that in the 5 to 10 billion company in the future. I don't see that impossible, but we'll see. Again, very bullish on this.
Great. Thank you for that summary. We got to move on to SEAC, but I just want to add something here. The fundamental, anyone can look it up and see their earnings and what's going on, how strong it is, but the price isn't reflecting it. And, I want to propose, as I said at the beginning, that this is all about the sentiment of how sustainable the business is. And yeah, the company may be projecting 500 million. He may feel confident that this is the new way to the new security in airports permanently. But a lot of the rest of the market, to me, is not making that bet. So that's something to be aware of. I ended up reducing my position a little bit. No, more than a little bit. I did reduce my position, but I may get back in. I may get back in quickly. We'll see. But
watch for that golden cross. Watch for that golden cross, and then then you'll be chasing it, Ben.
But here's the thing. Here's the thing to watch. Here's the thing that I'm a little bit worried about is when coronavirus started. My thesis from the very beginning was that this will die out naturally. I was actually a skeptic in terms of the ability for the pharmaceutical companies to come up with an effective vaccine. So I was wrong on that. They came, maybe I don't know about that. The jury might be out on that. It's half effective, I guess. It's not really stopping the spread so much, but it stops the severity we see. So I was surprised they're even able to do that. And I had always predicted that the end of COVID would end just like every other pandemic. And the best parallel was Spanish flu back in 1918, I believe it was. And what happened there, viruses have a tendency to mutate to a point where they become very contagious, but less dangerous. And if you think about the implications of a very, very contagious, imagine you take that to the nth level, right? It's super, it transmits to everyone instantly, but it has no symptoms, right? That's the extreme degree of mutations on a virus. And that's one of the theories of what ended the Spanish flu very quickly, is that when the virus mutated to something less dangerous and went to everybody, it basically caused a natural vaccine because you get an immune response to the less dangerous one, and then that would make you immune to the more dangerous ones and crowd out the more dangerous ones. And I've always that was my thesis, but I never saw any articles on this.
Yeah, sure. About a week. But if you think about it this way, if you are the U.S. government, are you gonna risk having some liability?
No. You may be right.
That something else emerges. This is not just about COVID. This is about establishing a new norm. No one wants another pandemic like that. Like, if you are the U.S. government, you don't want to be held liable about something that emerges, and after COVID, you don't have any preventative measures. You don't expect a bomb on every airplane, but you have to do the preventive measure. This is a new measure that we're going to be implementing because of this pandemic, and it's going to become the new norm. That's my belief.
I'm not disagreeing on that in terms of the fundamentals, but there's still speculation there because what I'm getting at is I think that there are a good amount of investors out there who feel that, hey, this may end one day and it may end suddenly. And when it ends suddenly, I bet you there's investors out there making the calculation that this 500 million projection is not going to happen. the CDC program is not going to happen, because if COVID ends overnight, just like the Spanish flu ended overnight, in 3 weeks, everyone's going to forget about everything and this company will go to zero. I'm not saying that will happen, but I think that's a bear perspective to be aware of. And, I think the news on COVID has been very bullish for the stock over the past weekend. But and it may do really well tomorrow, especially with them catching that variant at the airport Friday night. So anyway, that's the big picture. Just wanted to bring up that sentiment factor and the push and pull between the bears and the bulls. And there's a good chance I may re-enter. We'll have to see how everything goes. But Patrick, thank you so much for the update, guys. Give Patrick a follow. Later tonight, I'll give the link over to his Discord room if you want to collaborate on Xspa over in his community.
Thank you so much, Ben. Thanks for having me.
Yep, sure. All right. I want to move on to SEAC. All right. So we're going to invite Xspa Capital over here. I don't know if your first name is known. You can let us know how you want me to address you here. Hello.
Yep, I'm here.
All right. You go by Xspa?
You can call me Matt. I'm both.
Matt, how you doing? All right, great.
I'm doing good. No one usually calls me Xspa, but my nickname was MSU Mac in college when I was at Michigan State. So that's where the Xspa Capital comes from.
Excellent. Matt's a colleague of mine. I met him down at the Orlando FinTech Conference. Great meeting you down there. But so a little bit let me give a little background on SEAC and we'll let you jump in. You've been telling me about this stock, man, for at least 4, 5, 6 weeks, and it's kind of been on my radar, but I wasn't so interested because the chart was terrible and we're entering December, which I'm like, tax loss selling is going to hit this stock. So that's why I held off and I held off. And then finally, I got maybe a little bit lucky on my timing, but I'm like, it seems like a good week to buy these.
You got it like a couple days before.
I got it. I nailed the bottom. But I'm like, I think it's a good time to pick up some of these tax loss selling stocks. And I got in at a big way at like 70 cents. And then also because earnings were coming out in the following week as well. That was a catalyst. So I wanted to get
exactly. That's how I make my stocks.
There you go. That was catalyst was coming. I wanted to get in ahead of that. So thank you for that idea. I nailed the timing. And then we got hit with this whole big surprise of a possible merger with Triller. So I think there's two things to talk about here. It's the fundamentals of this company and then the possible upside of Triller. And maybe we can talk about, maybe that's not even priced in. I think you can make an argument the stock's worth 150 without this merger rumor. So tell us what's going on.
Yeah, it's definitely worth 150 without it. So, I got in and was pounding the table at 70 cents because, not everyone on this call might know this, but the most important thing for a fundamental investor is enterprise value. So, when the stock was trading at 70 cents, you had an enterprise value, which is the shares outstanding minus the cash on the balance sheet. So we were trading about I have to do the calculation, around 32 million minus 18 million in cash. So they're valuing a business at $14 million, yet they were going to do 31 million in sales the following year. Okay. What nobody really knew is they were transitioning their business from a cable business to moving to online ad tech and streaming, which is very important going forward. So, I loved it for that. I was buying it for that. And I knew tax loss selling was going to be an absolute disaster. But if you really look at the fundamentals and you saw that there's a catalyst coming on with earnings, you knew that there was a possibility that they were going to bid it up. And then right before earnings, it was like fate. I don't know. I feel like it was planted by Triller. You can kind of talk about that, and you maybe ask me some questions, and then I can kind of go over some stuff on that.
Yeah, that came out, and I didn't know what hit the stock. I thought it was someone making a market order trying to get ahead of earnings. So I actually had sold my position at 105.
I was gonna see if you're gonna say that or not.
No, I did. I made 40% in a week, and I'm like, oh, I can get right back in. This is probably someone with a fat finger on a market order. I couldn't find the news right away. Once I figured out what the news was, I bought back in the 130s. And then, after the earnings the next day, I kept on buying more. That earnings was incredible.
Yep, it was a massive beat. So you do have some support because the company's still trading pretty cheap. I mean, right now it's trading at about 1.8 times next year sales, and sales are going to go up 20 to 25%. So usually companies growing that much trade at 3, 4, 5 times sales. And what's interesting about Triller, I mean, there's many things. They try to do a direct listing, so you always got to tie in everything. So the first thing I saw was it was Jillian Tan over at Bloomberg. Okay. And Jillian is, she's a stud. Pretty much every deal she announces turns into fact. Okay. She's going to be wrong occasionally, but she called the Lucid deal. Okay. So that was my thing. As soon as Jillian was there, I was like, I'm not selling a share. Okay. Okay. And then 4 hours after the fact, you got Reuters coming out. All right, with the same story, but they have a $5.1 billion valuation with a $250 million co-investment. So I'm thinking, all right, Reuters and Bloomberg, right? They're not the Wall Street Journal, but they, 2 of the top 3 are calling it, and they're reporting on a $30 million company. It makes absolutely zero sense. They would never put their reputations. I mean, I have a media background, and there's no way in heck that they would put their reputations, they would laugh. Okay. So this had to have come from Triller, right? And here's what you do. So what I always do whenever I see an M&A report, I Google the reporter, and I want to see like how accurate they are, and then I check the deals. But in this situation, I didn't know who Echo Wong was, but she had reported on Triller 3 different times. Okay. Now that's not just a coincidence, right? So she's reported on it 3 times. They couldn't get a direct listing done, right? And SPACs. I mean, everyone in here knows how freaking toxic SPACs are. You really don't want to go public via SPAC because your valuation might get cut in half right away. And I mean, both those situations are expensive. An IPO might take 12 more months to get done. They couldn't do the direct listing. A SPAC is toxic. The best way to get public within 30 days is to do it via a reverse merger. So I am 95% confident this is going to happen. Now, I don't know what SEAC is going to own. SEAC is what I call it. So you have to run some numbers, right? So I saw the Reuters article, 5 billion, 250 million in sales this year, and then with a $250 million investment. So I don't know if they're valuing that pre or post, but my guess is if they're valuing the combined company at 20 times sales, or really a little bit less, about 15, 16, SEAC's got to get at least 4 or 5 times sales. Okay. They got to own, so I ran the numbers at 3%, at 5%. So my target price is anywhere between 325 and how did I get that number? All right. 48 million shares outstanding times 325 is about 3 times sales. And then backing out the cash, and then 525 is if it's at 5 times sales. So that is, if the other company who needs SEAC, right? They need them. So basically they're going to say, well, I'm not going to sell it at 1 time sales. You're going to have to give me 3%, 5% of the combined, right? And because, Triller's trading at a pretty crazy multiple. And here's another really tidbit. So I got a call. I do a lot of private placements. So VC companies call me a lot of times, and they call me like, "Hey, I got access to Triller." I go, "Oh, really?" This is another coincidence. And so I'm like, "Oh, okay. Tell me what it is." So they're going to give it to me at a discount. They must have a lot in the books that they want to get rid of, because then whoever owns it has to hold. There's usually a lockup period. So my question to them was, hey, I need to know what next year's sales is going to be, and what the lockup is going to be. So they didn't know if there's going to be a lockup, so they're going to call me back Monday. So if the deal doesn't happen Monday, and I think it will, but if it doesn't, they're going to get back to me. But they said they think sales is going to be $600 million next year. So if Wall Street sees that and SEAC's involved, this could be the next Rumble. This could be the next DWAC, right?
Yeah. It could be, absolutely. There's that upside potential there, especially because I guess Trump still was not banned from that platform.
No, he did a fight. He that big fight, I believe, was on the Triller platform.
What fight was that?
Yeah, so he actually went on the Triller platform. So that's why they're calling it a Trump play. Okay. But here's something that I might not be, you can read into. I know, some people just do fundamental analysis. I do fundamental analysis, but I actually speak with the companies. So I have a very good relationship with SEAC. And, usually after the call, they'll I have enough shares that they'll speak with me right away. Like I asked and like, oh, I can't talk to you till next week. So I don't know if that means anything.
Yeah, I have a similar story. I've been in touch with them because we've been trying to get management to speak to our story trading community. And at first, they were very enthusiastic. There was an email chain and a couple emails back and forth trying to learn about story trading. And they're like, yeah, let's schedule this. Really enthusiastic. And then all of a sudden, they just stopped responding to me. And I've sent 2 or 3 follow-up messages in the past 7 to 10 days. And they're not all of a sudden not responding to me, which means that something's brewing.
Yeah, well, see, the difference is, I made that introduction to you. So he doesn't, for me, he had to respond, right?
Right.
So, that doesn't mean anything. He's just, oh, we can talk next week. So it's but usually I can have that call, with around all the other investors and analysts. Earnings was Tuesday. I should be able to talk to them Wednesday, Thursday, or Friday, right? So, I might be reading into that wrong, but that's just another thing that I look at. But even regardless of the merger, the stock is dirt cheap here, and I think it will pull back if it. But here's something you got to look at who's tweeting about it too. So there's a douchebag. I'm sorry, I don't know if I can say that on here, but Real Will Meads. Guys like him probably in this thing, but he blocked me for, I think I commented on his gambling thing once, but he's got 250,000 followers, and he was out on the weekend talking about, and I'm not a technical guy, maybe someone could step in here, a flag pattern. I look at the 50 and 200 day, I'm a pure fundamental guy, I look at 50 or 200, but he was saying there's a great setup for a flag pattern or something, but he's got 250,000 people that he sees. So, so even if the deal's not announced Monday morning, I think there's going to be some support from Real Will Meads guys.
Yeah. What I really love about this is the limited downside. The risk reward here is great because, I think there's a risk if the deal falls through and it becomes widely known that it fell through. I could see this, maybe going back below 1 rather quickly. But based on those earnings, another thing I was playing was I was selling $1 puts on Friday for 15 cents and 10 cents. And that's an insane return, 15% selling puts in 30 days. So I just feel really, really comfortable with the downside because the fundamentals are there. And then you get optionality to the upside.
Yep, exactly. I'm trying to think if there's anything else that I might have missed. Okay, so the business, right? They have Verizon, Cox Communications, AT&T. So these all the cable business, and they're still getting that cable business. So let's say you're watching your cable. I'm sure most of the people here, cut the cord. But if there's an ad, all their ad technology is there to give ads if there's an opening in the ad budget or the ad space. So their technology powers all the cable companies. So what they did is about 8 months ago they pivoted. Right, so they're still working on that technology, but they're working on ad tech into video. So Ben, if you host 24-hour videos and that's how you eventually monetize, they're going to be able to insert their ad tech like when you do breaks or while you're speaking, and you're going to be able to monetize if you have a huge audience. So it's going to be based off an audience.
Does that have something to do with why Triller may be interested? They're doing
exactly
videos.
Exactly. So they have the best ad tech out there, but no one knows who they are because they haven't had the capital to invest. And their ad tech was just for video until 7 months ago.
Fascinating story.
Yep. So let's say someone's streaming YouTube's. They told me their CPMs are 3 times what you could get going directly to YouTube. Right. So they're dealing direct where, you don't have to split as much, with YouTube, who takes a bigger cut. But it's just not the ad tech in the video. So let's say StoryTrading wants to have a streaming channel on Roku, Fubo TV. They have a turnkey solution and have a revenue split arrangement. I think there might be another business model too, where you could pay for it up front. but most new content people want, so let's say as you grow, then you're going to grow with them. So and then they'll insert their ad tech into the streaming. So that is the angle. And on the conference call, they had signed a bunch of companies, and then they had signed a satellite company. I mean, it could be anyone. It could be DirecTV. I'm guessing it probably is because of their relationship with AT&T. But I mean, they said they signed a tier 1 satellite company for a streaming solution. So let's say DirecTV wants to build a streaming on like all these different that it would be their technology powering it, and they'd have some type of revenue split or some other revenue arrangement.
Sounds great, Matt. Thank you so much for that update. Looking forward to what happens. I almost hope that the deal doesn't get announced tomorrow, so I have a chance to add more to my position. But Matt, again, thank you so much. I think, you know what? Let me just mention, this was a pick. It was also, unless it was you, Matt, there was another Matt in our community, possibly Matt S., who submitted this as a January trade idea. We had a meeting 2 weeks ago on our VIP Zoom. We have it every Sunday night. And the topic of the night was, let's find the most undervalued, beaten down stocks due to tax loss selling that could have a great January. And SEAC was one of them. And there were lots of other picks that have been doing great. Some of them up 17%, 10%, 10%, 8%. I'm looking at the list right now. Was there, I think he said he wanted to mention one other stock tonight on the show.
Who, me? Yeah. I have something with a major catalyst on Tuesday. It's called Yatra. It's another small cap stock. Now we talked about COVID, so this could be a killer, but Yatra is kind of the Priceline, the Expedia of India. And these stocks, I mean, they're doing the best in the world at COVID. Don't ask me why, but in 1.3 billion people, they only have 7,000 cases. About 6 months ago, they were the worst in the country. Now, I mean, I've heard all kinds of crazy stories, conspiracy theories on why they're doing the best. I'm trying to figure that out. But 7,000 cases in the United States is like 1,000, right? And we're printing a couple 100,000 a day, right? And but so travel has come back like crazy. And then there's 2 companies that went public this year, Ease My Trip and Ixago, and they're trading at 12 times EV to sales. I mean, it could be 10. I haven't looked at it in like 3 months, but it's high. Okay. And so what Yatra is doing, they've had to delay their earnings, which I think are going to be a blowout. It's coming Tuesday morning, so you have a day to get in. It's perfect timing. And they had to wait before they filed an India listing because they're not getting any respect. They're trading at 1 times EV to sales versus 10 to 12 times EV to sales for their competition. And there's much more appetite for India companies on their exchange. It's been the hottest stock market this year. So not only are you going to have awesome earnings, and I think a pretty good guide. Okay, you have this ability for, like, the institutions are going to come in, and once they see this, they're going to arb that out. So 2 months down the line, when it does IPO, let's say it's 1 month, 2 months, they're going to raise capital at 6 times sales, 5, 7. I don't know what they're going to raise at, but it's going to be much higher than 1 time. So what's going to happen is ARBs, institutional ARBs, will instantaneously try to bid that up, and if they don't, what Yatra's plan will be is they're going to take all that money that they raised over in India and take out ADRs, which obviously it's like a big buyback. So I mean, it's possible. And I mean, right off the bat, let's say they raise it 6 times, they take it.
Hello? I think we lost Matt. Matt, you there? Or did I?
I'm here. Can you hear me?
Yeah, I hear you now. Go ahead.
All right, so it's like my phone goes off. I'm doing this on my phone. So basically, there's an ARB opportunity where they might bid up the stock, raise it 6 times, go to 10 or 12 times sales, and then if it's still trading at 1 times EV to sales, right? They're going to come in and buy back the stock. It's just in my opinion the best way. Like, the one thing that I'm worried about is if COVID gets out of control and then complete travel. But Americans are over it. People are traveling like crazy. It's literally my top 22 play based off of how well they're doing, their freight business, and some of the other things that they're doing, initiatives.
Wow, your top play for 2022. Good to know. Awesome.
Well, no, sorry. So in the speculative arena, SEAC was, but it's moved up from 70 cents. So
right, got it. All right, Matt, thank you so much for that. Following this show, we're actually going to have another VIP Zoom on the January effect and trying to find these beaten down tax loss selling stocks. That starts in 10 minutes for our VIP members at StoryTrading. So if you are a VIP member of StoryTrading,
historically, let me jump in there. Historically, tax loss selling stops on Friday, like last Friday. So obviously retail is still going to be involved, but institutions will start deploying capital starting today, Monday.
Yeah, this week.
And then follow me on Twitter, guys. I got to hop off, but
thank you so
MSU
much.
Mac on Twitter.
Absolutely, tap his profile right there. You can follow him. And that's been my experience too, is the week of Christmas Eve, which is this week, is a great time to get into those stocks. So it's going to be an awesome show tonight. We're running a little bit late, but we want to get to GMER, GMER. I'm going to invite John. Oops. John, 1 second. You there? Oh, you have the speaker rights already. So GMER was a VIP pick in our community by, I think, Michael, and he wasn't able to join us tonight. Now, this stock has not performed great. It's been down pretty significantly, but I decided to get in this past week in a much bigger way because of technicals, maybe some tax loss selling, and it had a huge catalyst. Their game launched Friday night. This is an NFT gaming stock. Now, the fundamentals are quite suspect here at this point for me. I don't totally understand the business model with this NFTs. I have a lot to learn on it, but between the technicals, the catalyst of the game launch, there's probably going to be a huge announcement tomorrow morning with some initial metrics. I've been trying to track the metrics on OpenSea to see how things are going. I'm following the discussion with the players and on Discord. There's a back and forth with management there and customer service. So this is really interesting because NFT is really hot. Gaming is really hot. I've been at a couple venture capital conferences in recent months, and man, the enthusiasm in NFTs is huge among VCs. There's a lot of money right now, a lot of institutional money is going into NFTs. It seems, I don't know, maybe they felt they missed out on crypto in the early days, and they're like, hey, this stuff is real. We want to jump into NFTs. There's a lot of money in NFTs. It looks like it could be a real business. So what do you think, John? The stock has been really, really beaten up. There was not much of a move yet in anticipation of the game launch Friday. We had the game launch Friday. The fully diluted market cap is, I think, somewhere in the $15 to $17 million range. It's definitely fundamentally probably pretty risky, but where are we at now, John?
Well, I'll tell you, my approach to this is I first heard the presentation by Michael Cook, which was very, very good, which he did on StoryTrading. It caught my interest because of the NFT gaming aspect of it, that people could get in and build these things and sell them and make money. And I don't fully understand how it all works, but I'm still intrigued enough that I did take a position. I did add to my position as the price dropped this week or this past couple of weeks. So my average is now about 20 cents, but I'm going to stay in this and hang on. I like the idea of this stock. Honestly, I don't fully understand it, but I understand it enough to know that it's something that could grab hold of trend traders' interest. And I also understand that this game doesn't just explode the way, say, a traditional game like a PlayStation game where everybody camps out overnight and buys the latest game that's released, and you suddenly have tens of thousands of people playing it the next day. This is different. This starts slowly and builds over time, similar to the way CryptoKitties did over the years. So for me, I'm in this. I'm going to wait and see how it goes. I am disappointed with the price action recently. There was no run up to the release of the game. But I suspect, I don't know, but I suspect there's a bit of manipulation in the share price. I suspect the timing of the parent company via one, they eliminated their debt, and the they converted it to preferred shares, and they haven't released the filing of that yet. But when they do, that filing will show how many regular shares the preferred shares will be able to be traded in for or converted to. And it could be that they timed it at this time when the price is 11 cents so that they can maximize the amount of regular shares they can convert to.
Mhm.
So, I'm speculating all this, but it could be just sort of a big strategy for them to absolutely maximize their leverage in their position in this stock. So all these things have piqued my interest. Speculative on my part, but I'm intrigued by it. So far over the weekend, there's some of these things have sold. People are playing. It's starting to have a little bit of momentum, and not unsurprisingly, slow but growing. And so we'll see how it goes.
Yeah, absolutely. This is a speculative play for me and my trading account because the fundamentals aren't there to be in my longer term IRA. But I love it as a speculative trade. Again, the sentiment, NFT gaming hot, the catalyst of the game release, the technicals. Looks like there's been strong support here at 10 cents. We'll see what happens. Fundamentals, yeah, I don't think it's there yet, but they are playing the game. I see on OpenSea there's 3,800 items listed. There's been several dozen sales on the secondary market here in OpenSea happening. So there's some potential.
Yeah, I agree.
So great. Thank you so much, John, for helping us out with that update on GMER, GMER. Again, we didn't have a chance to really talk too much about Globe, GLBE. Maybe we'll do that next week. We can invite our presenter there, Akil, see if he's going to be available. And he picked up, he kind of specializes in large cap picks. He had a VIP pick Matterport a few weeks before that, and he closed it out because he thought it got really overvalued, and he nailed it on the overvaluation of Matterport. He got like a 55% return in 2 weeks for our community. So that was really good. We'll talk about that in the future. And with that, man, Jared, we didn't get a chance to talk to you. I always enjoy co-hosting this show with you, but we had so many guest speakers on tonight. A lot of stuff to cover. So I will be co-hosting the show with you in the VIP Zoom in just about 1 minute. So thank you, everyone, for participating. We will see you around.